Well, clearly it's been a very difficult quarter for all financial markets, none more so than the global stock markets, which has suffered some very severe declines around the globe. The arrival of COVID-19 has caused governments to shut down large swathes of our economies, and as a result, companies are far from fully operational. This is an unprecedented situation. Unfortunately, it looks set to persist for some time yet. It's all going to depend on when we get this virus under control, which is going to rest probably on one of two things. Either some therapeutic cure to keep people out of hospital and to stop them from dying, or the arrival of some sort of vaccine. And certainly, the second of those items looks to be some time away yet. Well, global markets have traded in a very violent fashion, and it's affected absolutely everything. Not only stock markets, global credit markets, commodity markets, government bond markets, gold markets, energy markets have all really suffered some very major swings in prices over the quarter. And at times, the trading has become somewhat disorderly. This is all rather reminiscent of what happened in 2008. Thankfully, on this occasion, the global banking system is far better capitalised, and we don't suffer the risks of falling into some financial cataclysm as we did in 2008. Clearly, this shutdown will have a profound effect on us all. Interestingly, I'm shooting this video from home, where I've been working these last few weeks. Indeed, all my colleagues at Square Mile have also been working at home. The organisation as a whole has not really suffered that much in the way of disruption. It'll be interesting to see how our habits change once this shutdown has been released. Likewise, even other businesses such as manufacturing firms will also change the way they operate at the back of this. Global supply chains are likely to become much shorter and less reliant on international trade. Likewise, we can see an increasing move towards digitalisation. This is a theme that was clearly in place already. However, we think these moves are going to be accelerated over the coming weeks, and it will have profound implications for the way that the economy works. Markets have been moving so quickly over recent weeks, it's been difficult to make structural changes to the portfolio. However, as things quieten down, we think we'll make quite a few changes. One area which we'll be looking more closely at is smaller companies. These tend to be more agile than larger companies and could end up being quicker to repositioning themselves in today's new environment. Likewise, we also think that taxes are going to be rising. I'm afraid we're all going to be a little bit poorer as a consequence of this global shutdown, and corporation taxes are almost certainly likely to climb. On a risk-reward basis, this means that there may be some better opportunities in the fixed income market than more than the traditional equity space. Markets have come a long way over the last few weeks, and there's been a very rapid climb from the lows which we saw in the middle of March. We think there is going to be some further bad news as the second round impact of the collapse in demand feed its way through the system. This could present us with some interesting opportunities to be buying into some cheap stocks. We're currently in the middle of reworking our investment models to take account of the new environment and to help us firm up what would be a good valuation entry point into risk assets.